This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, joined as always by my good friend and colleague, back fresh from a trip to Disney World. How are you doing, Todd?
I'm good, Peter. How are you? Welcome back, Andrew, as well.
Yes, good to have Andrew Dix from Crowdfund Insider, who is by. That is a real background, a real fireplace that he has right going here. We have a fireside chat with Andrew. How are you doing?
A real fireside chat. Yeah. Thank you, Peter. Thank you, Todd. Thank you for inviting me back once again. It's good to see you both of you.
Okay, so I want to kick it off with a story that just really came out a couple of hours ago, but it's something that I've been waiting for a while, and this is Project Hamilton, which is a joint venture between the Boston Fed and MIT. And this is really, it's all about CBDCs, right? So they've just released their report. It's like 44 pages long. I haven't read it, obviously. It's just come out. But this is sort of the how-to. If we were to do a CBDC, this is kind of how it might look. And there's nothing is definitive here. It's all just, it's up for discussion. In fact, all the code they've released all the code. It's open source now, called Open CBDC. And the thing that's interesting to me about this is they've designed this to be able to handle 1.7 million transactions per second. And I just checked with Visa. Visa say they can handle 24,000 transactions a second. So it's much more robust than that. And I looked at Alipay when they have the singles days, and they still have never got over 1 million transactions a second at Alipay at the height of the singles day. So still, that's a very, very robust system. And, it remains to be seen whether it will see the light of day, but I think it's big news nonetheless.
I mean, I think it's interesting how we always equate CBDCs and innovation here as if it always has to be blockchain based technology. And I think they made a point of saying, right now, at least, the bottleneck that blockchain could potentially cause. And I think it's, the dynamic is we've talked about how much innovation's happened and how fast crypto is moving in. But at the very basic level, it's still so early. I think Bitcoin can handle 8, maybe 7 or 8 transactions a second. So it's fascinating to see the report, the potential in this CBDC. The limitations of blockchain, but knowing just how early everything still is here.
Mm-hmm. Yeah, I have not had a chance to read the report yet, but I'm very excited to do so. Mm-hmm. I'll note, since you bring up, the downsides of using DLT is the Chinese digital yuan does not use just blockchain technology.
Right.
So they've decided to go a bifurcated path. I think that this is a very interesting discussion about moving to digital transactions, but I still think the jury is out as to whether it will be the federal government that provides a digital dollar or whether private companies will offer something akin to a stable coin that is highly regulated, that provides transactions at a speed that is good enough for the future. Mm-hmm. I think that some of the challenges with the Chinese CBDC, I think we all know about, is the fact that once the government controls the digital currency, they can see every single transaction that you do. And I think that that's something that's going to be difficult for people in the United States to accept. Currently, there's legislation in the works in the House that the Fed would not be allowed to issue a digital dollar to consumers. That doesn't mean that they can't do it for institutional transactions. That kind of makes sense. I think that the House and the Senate are going to be very engaged in this topic, and that nothing will happen until you get bespoke legislation to regulate and manage it.
Right. Well, and the word privacy, just did a scan in this report here. It's almost 50 times that the word privacy appears. So clearly, that's on the minds of the Fed as they're doing this. And anyway, let's move on. I want to talk about a couple of big funding rounds here. First, FTX. Which we've seen on the TV a lot. This is the FTX parent company, or the one that's based in the Bahamas, different to FTX US. But the FTX parent raised $400 million at a $32 billion valuation, up from $25 billion 4 months ago was their last raise. At least it didn't double the valuation. That's something. But crypto is going through a lot of volatility right now, but the technology companies that are in crypto seem to be able to be unaffected by the volatility and are raising money at record levels.
At least unaffected in the sense that VCs are still making those big bets. That the future is at least in some ways linked to crypto. How that all plays out in the future and Web3 and I think remains to be seen, but there still will be some long-term linkage there that VCs feel comfortable enough continuing to make these outsized bets with a lot of these companies in the space. And I think it's fascinating as you see some of the pullback in, say, traditional fintech companies. It hasn't been ginormous, but they've started to pull back a little bit valuations. Yep. Especially on the public side, you still see this just flooding of companies in the crypto space. So I think that dynamic is pretty fascinating to see how it plays out.
Mm-hmm. Yeah, FTX, it's an amazing company, and I think that the founder Sam Bankman-Fried is the smartest or one of the smartest guys in this sector.
He's a machine.
He's absolutely brilliant.
Yeah.
I listened to him not too long ago participate in a hearing in Congress, and he just nails everything. He knows what he's doing. He had a lot of foresight in initially creating two operations, FTX.US and FTX, everywhere else, and setting it up in the Bahamas. He's been compliance first, something you have to do. And he understands trading and traders, and he's really created a stack that works. And right now, I think that FTX is the one platform to potentially rule them all. You have a lot of other platforms that have first mover advantage, but I think FTX has just got the momentum right now. They've got the money. They're really just growing hand over fist, and so it's just really an amazing company.
Yep. And another amazing company, which actually has nothing to do with crypto, is Ramp, which Ramp is less than 3 years old. They were founded in 2019. They are now worth $8 billion at the last round that was said to be $200 million raised. Their valuation was $4 billion all the way back in August. What's that, like 5 months ago? The valuation is reportedly 80 times revenue, which actually, when you look at the comps, it's not completely off the planet. There are others that are trading at even higher multiples than that. And of course, their arch rival is Brex. Brex is a $12.3 billion valuation when they last raised. They're overdue. They've been like 3 or 4 months without a raise. So. And so, and these again, young founders doing it's all about, basically expend management for companies and clearly investors think Ramp and Brex are both going to crush it.
I think besides obviously the crypto market, I think one of the more fascinating spaces in fintech and financial services coming out of COVID is how startups, small businesses, early stage, high growth companies are being served financially. Prior to the pandemic, and many of these companies, were not being served well by traditional banks. But now you have these options, Brexit, ramps, the world, and even others. Even if you take away, the Brexit ramp angle, you talk about a lot of data type firms that are now offering their products to small business that give them so much more flexibility than they've ever had before. And so small businesses as a segment are probably going to be better served coming out of COVID than they've ever been before, with so many different options. And you have Brex and obviously Ramp being two of those that are serving more of the high growth type companies. But really, I think that we're kind of entering a golden age of kind of maybe not banking, but at least financial services offerings for the small business owner.
Yep.
Yeah, I think it's a bit of a land grab, right? We're kind of in online lending 3.0, or
Right.
online credit 3.0, where there's been a lot of iterations in that space in the past. It's almost going on 2 decades. God. And so I think people are saying, we see a fast growing small operation. Let's get it now while we can and while we have the cash to do it. And let's get bigger, faster, sooner.
Yeah. Yeah. So we'll stay with the small business theme because we have there was an interesting M&A deal this week. Amount, which was spun out of Avant a few years back, really focusing on banking as a service type, lending as a service type offerings. They have bought Linear Financial Technologies, and if you don't know Linear, that they've only been around a year as in their current form, but it was Foundation. Sam Graziano started Foundation. Yeah, probably like almost 10 years ago would be my guess. And they became Linear when they merged with ODX, which was 1 year ago this month. ODX was the banking as a service, lending as a service offering from OnDeck. So now they're all under Amount, cash and stock deal, 175 million. This is again, we've got Amount, which really has been focused on consumer offerings primarily, point of sale and consumer lending. Now they're going to have a small business offering. So, the Amount sort of cementing themselves as this one-stop shop for banks.
Natural evolution to go more full stack offering versus just on the consumer side. And I think it was Amount raised somewhere in the range of 90 or so million, and I think it was sometime in the last 6 months, or at least the last year. So, clearly they're pushing on the growth scale a bit, and looking to help banks not only on the consumer but now the small business side.
Mm-hmm.
Yeah, it's a hot market. I mean, there's just a lot of money looking for deals right now. Looking for the service that can add value to an existing service. Who's the next Affirm, who's the next, whatever. I think you're going to see more of this, more consolidation. It's just people realize that, now's the time to seize the day to get as big as possible.
Yep. Okay, so moving on, Upgrade had some news this week. We have Upgrade Shopping now. This is the Upgrade card. Renaud Laplanche, former CEO of Lending Club, now Upgrade CEO, and they're doing really, really well. Andrew, why don't you tee this up, because I think you spoke with Renaud, it looks like, when I read your piece. So why don't you tee it up?
Yeah. So when we hear from them, I'm always, Renaud's kind of an iconic individual for the fintech sector.
Yep.
Lending Club was really, love it or hate it, it was really the first online lender to go public, the first, really big, credit platform to go public in the US, I think.
Yep.
And they've really evolved over time, because now they started as P2P. They do that no more. They're now a digital bank. They're one of 4 or 5 in the United States. So I'm always curious as to his perspective, because him, Peter. He's giga plugged in. I mean, he's probably doesn't sleep at all. And so I think that the shopping is really interesting, especially with the cash back that they have there to continue to fuel that growth, which is they're executing on. But also, I thought it was interesting to hear his thoughts about the the fintech sector, the neobanking or digital banking sector in general. I view digital banks as chartered federal banks. You're an actual bank minus the branches. Neobanks, you provide bank-like services and you've partnered with a chartered bank. And he continues to be committed to pursuing a neobank path. And I find that interesting because he's a very smart guy.
Mm-hmm. Mm-hmm.
I also think it's it's interesting to see how fintechs and banks are working to keep the customer inside the app. JP Morgan, I can book flights inside their app. I can do shopping, do restaurant reservations, and so Upgrade now you can shop in the app. So it's kind of like, hey, you're here, you got a loan from us, you got a credit card from us. Now don't go away. We want you to use that credit card. So here's a shopping option, or here's a flight option. And so I think it's fascinating to see how in depth and diverse they can get in those offerings. And it kind of is going back to a little bit of the rebundling in some way of financial services. So it's interesting, and I thought that it was funny seeing the 7% cash back for the 7% related to inflation. So
right.
It was kind of a play on that, which I thought was smart in terms of marketing.
Yeah, and like 7% rewards. I mean, obviously they're getting probably a kickback from the merchant to be able to do that, but that can be compelling for really. If you're going to spend the money anyway, you again 7% is that's a really good amount to spend, and I feel like Upgrade has really. My daughter is texting me during this thing. I'm going to ignore it. So. Yeah, the clearly I feel like Upgrade is now positioning themselves as you talked about the super app. That seems like we've heard the word super app a lot. I'm actually working on a story I'm going to write about it over the next few days because I feel like there's so much talk in 2022 about super apps, and I don't know if really what they're going to qualify as a super app in my eyes, but they're moving that direction to become more encompassing because they have this. They all have these. Relationships with their customers that they want to bring into the fore and offer more products and services to them. So I think Upgrade, they continue to crush it. I don't believe Renault. I think he'll get a banking license at some point, but he's probably biding his time. It might be 2 or 3 years down the track, but I can't imagine him not going that route when you can look at the increased profits that are available there. Anyway, let's move on to Afterpay. Since we touched on buy now, pay later, Afterpay were in the news this week because I think it was August of last year. I remember waking up on a Monday morning going, holy cow, Afterpay have been getting acquired by Square, as it was called back then, for $29 billion. And that was consummated this week, and now Afterpay is part of what is now called Block. And that the founders, Nick and Anthony, are still staying on. They're running Afterpay business, and the one thing that they've done in the last whatever that was 6 months they've had this kind of in between process before the deal closed. They have actually integrated with Square merchants now having Afterpay, buy now, pay later capabilities so that the merchants can offer BNPL. It seems that's available today. As my understanding of it, and so we see one of the big three in the buy now pay later, or big four if you include PayPal, have they're now part of another company.
Well, first, thank you to Jay Nelson for your comment there. We appreciate you as well, Peter. I think the bullet point in our document here that I find most interesting is the integration. With Cash App and Afterpay, and kind of what that's gonna look like at launch.
Mm-hmm. Yeah, I think more of the same. Land grab. People are they're rushing to get as big as they can, as fast as they can, to be the one or one of the several that will succeed over time.
Right. Yeah, and the aforementioned PayPal. Released earnings this week, and it wasn't pretty for them. And I actually have one of my best friends works at PayPal, and I texted him last night, and he said it was an ugly day. Just in general, 25% drop in the stock price with a company that was worth north of 300 billion now in the sort of mid 100s, and they the one thing I want to focus on here, they fell short of expectations. The one thing they said that was, I thought, really interesting was, that 4.5 million accounts they've deemed as illegitimate because of some sort of potential fraudulent activity. And PayPal have been adding accounts left, right, and center, like 120 million new accounts added in 2020 and 2021 combined. But now we find that 4.5 million were illegitimate. Still a relatively low percent, I guess, is like 4% low. I guess it probably is, but it's still a lot of fake accounts there.
Yeah, I'll jump in here because I think that as these companies become public, they realize that the scrutiny can be intense and the degree of disclosure rises. And so I think that all these firms that have become listed companies is they've had to go back and say, where are our weaknesses, and realizing that there are certain opportunities to leverage these digital platforms for fraudulent purposes. That being said, I think that PayPal's results were a disaster. I was listening to the punditry on television yesterday, and people were calling it a failure to execute, a lack of leadership. They spared no adjective and just blasting management at PayPal, and I tend to agree. And also recently on the Twitterati in certain realms have been blasting PayPal because they have seemed to be deplatforming certain people whose political views they don't agree with. And I don't care what side of the fence you're on, but I don't think that a financial service firm should do that. So I find that reprehensible. Also, PayPal is an expensive service, and I think you have new services coming along like stable coins that are going to be able to do it faster and cheaper, that are going to be able to undermine the margins that PayPal is garnering today. And I think that that's something that people aren't really talking about, but it will be part of the discussion going forward. So, PayPal, they lose this week.
I couldn't say it better myself.
Yeah, it's
perfect.
I mean, I think the thing about PayPal, they have all the ingredients they need to be just super successful. They've got more financial services offerings than any other company. And
it's management at this point. The board needs to make a change. I'm sorry, you're a publicly traded company. It's leadership, and they need to act.
Yep. Okay, so let's move to India, where we had some news this week about crypto, and that is really, the news is that the finance minister gave her budget speech, and she said that they're going to tax crypto at 30%. Any income, any profits that received from crypto, taxed at 30%. I presume that means right now it's not taxed. I don't really know the system. I mean, clearly in the US, it's property, and you have, if you have a capital gain, you have to pay capital gains tax on your crypto. But in India, it was funny because some of the crypto exchanges really were, they said this was a positive development. The people said this was horrible. What do you guys think?
I mean, it's interesting to see how some of these countries are going to play this out, and kind of where they end up falling. I don't think 30% is exceedingly crazy when you think about the potential of the gains that you can make in crypto, though quite volatile at times, as we've seen. I think in Europe, don't they tax some things 50 or 60%? So
yeah, they do, but you don't pay it. That's you avoid it.
Yeah, I mean, it's I think this one's a bit more interesting than China. China's a run by the Communist Party, and basically one person. India's experiment will be a little bit different, and then the next country, wherever that might be, Europe. I mean, my fear is still that the U.S. is just going to keep lagging behind. Yeah, we have Project Hamilton, we have the Fed, but Andrew, you've talked about this many times on this show. Like, those in Congress need to do something, and they need to get a better hold and a handle on what's happening, and need to fully start to grasp. And I don't know if many of them even can, but at least start to put the effort in, because countries that have billions of people that are going to start using stuff like this is going to really leave the U.S. scratching and clawing to come from way behind eventually.
Yeah. So I think, first about India, this policy odyssey has been going on for a really long time. I actually had kind of started to lose interest in it because it had gone back and forth. There's a robust, crypto industry in India. But this most recent announcement, I was kind of like, okay, if you can't beat them, join them. It really makes sense. Just tell them it's okay, but we want to cut the action. Is it 30% a lot? I think it is, but then, how much of that are people actually going to pay? I don't know. I don't understand the tax environment in India. It sounds like a lot to me, but I think it's a smart move on the government's part, because otherwise it just goes underground and people avoid it anyway, as we all know. Back to the U.S. and regulation, the one big thing that the U.S. has going for it is the market size and the depth of capital markets and the ocean of money that's chasing deals. So even if you're a crypto platform, you want access to those markets and the rule of law that exists in this country. And so that's kind of been, saving our bacon for the time being. I do think something will be done. I don't know if it'll be a good thing, but I think in the long run, the U.S. can win out. In the short term, it may be a little bit disappointing, though.
Right. Yep. Yeah. We should also point out that India also said they're planning to launch a CBDC pilot within about a year. So that's going to be interesting to watch.
I still find arguably the most interesting question is, how does India's CBDC play with China's, play with the U.S., play with France, play with Germany? Like, we have no idea if any of them are really thinking of interoperability.
I'm sure that they're totally thinking about it. They're totally thinking about it.
Are they coordinating on it?
Yes, they are.
So Singapore
I'm not convinced about that.
Has been working on it. They've been working cross borders with China and elsewhere, I think.
Well, there's a group. I just found out this morning when I had a conversation with someone at Cambridge University that there is a group of 800 regulators that are interested in CBDC that have been communicating at least for the last year and will continue to communicate. So there's real lines of communication that are open between governments. I think it's.
But my fear is those governments can change. So whoever's there today can be gone.
Sure.
And whoever's there today could be very supportive.
The public servants that are there that doing the work, a lot of them stay administration. So I think a lot of it will stay. But anyway, I'm
more pessimistic on the.
I'm optimistic. So we'll see what happens. Anyway. I can't have a show without talking about overdrafts. We had another bank this week announced. TD Bank said that they are going to abolish overdraft fees if you overdraw your account by $50 or less. So that is great news for TD Bank customers. Also saying they're going to introduce low balance alerts, which is sort of this. I think PNC Bank had that where they're going to give you a 24-hour grace period that let you know that your account is going to be overdrawn. So good news. And the TD Bank, apparently 8.9% of revenue came from fees last fiscal year. So this is another one. I feel like most banks now, it seems like most large banks, or many large banks, wouldn't say most, are taking action.
So, the real question, the after effect, is how do they make up the 8.9%? They're not going to lose it all, because there'll be people who obviously go over the $50, but a majority of people will probably fall in that $20, $30 range. But then where does that, say if they keep one or 2% of that. Where are they making up 7.5%?
Yep.
Well, they can't make it up by closing, branches, unfortunately. But
Better technology, maybe they close more loans.
Yeah. Well, I mean, that's why fintechs win, right?
Yeah.
Because they don't have a foundation that's on clay or sand. And there was in December, I believe it was, the CFPB issued a report on these fees, and it slammed them. And you have an administration right now that is gunning for these fees, and so traditional finance needs to get on the same page and just get rid of them, and keep things moving along. It'll be painful, but you're going to have to do it. Otherwise, you lose in the long run. You lose in the short run, you lose in the long run.
Yep.
It makes a lot of sense to get out of it. It's just ridiculous that these fees still exist. It's usurious. It's it's the whole $20 or $30 cup of coffee we've read about so many times. Old finance needs to get with the game. Just do it.
Here. That is a great way to end. We are out of time, everybody. Thank you very much, Andrew, for joining us today. Thanks, Todd, as always. Thanks,
Andrew.
Thank you to the audience for watching or listening. Before we go, quick heads up that we will be in Miami next week, FinTech Nexus. I think there's still a couple of tickets available if you want to go to LendIt.com and you want to join the fun in Miami. It will be happening Monday and Tuesday of next week. So with that, we'll all be back the same time next week. Have a great weekend, everybody. Thanks.
See ya.
Thank you, Todd. Thank you, Peter.
Thanks.